The Trade Desk stock price crashed after the company reported their quarterly financial earnings results. That created a lot of investor interest, asking if it's a buying opportunity on the dip. Also, investors want to know where the stock price will be by the end of next year. Will the stock price continue falling, or will it recover and start moving higher? Well, I can answer part of those questions or some of those questions in this video. So back to the main point of the video, the price target for Trade Desk. One of the numbers I'm going to need is the earnings per share estimate from Wall Street Analyst for the Trade Desk for fiscal year 2027. That's the number you see here, $2.56. December 2027 earnings per share estimate. $2.56 is what Wall Street believes the Trade Desk will deliver in that year. The next number I'm going to need is the Trade Desk forward price to earnings ratio. And you can see here 27.81 is the current forward PE ratio for the Trade Desk. And it's near the lowest point it's been, going all the way back to January of 2024. You've hardly had the opportunity to buy the Trade Desk stock at its current valuation when measured by the forward price to earnings ratio. That's one of the reasons why I rated the Trade Desk stock as a buy following the company's stock price crash after it reported disappointing quarterly earnings results. Of course, the major negative from that earnings review, from that earnings result, was the company's announcement of how Amazon's advertising business is eating into the potential for the Trade Desk. And so that was something that spooked investors significantly and led to this big stock price decline. And this, what we're looking at here, is a valuation decline in addition to the stock price decline that the Trade Desk experienced. So now that we have the inputs we need, I can share with you the model I'm utilizing to make this stock price prediction. I modeled out 4 different scenarios for the Trade Desk. What I'm going to hold constant is the earnings per share estimate for 2027 at $2.56. What's more volatile, and what I'm going to simulate in 4 different scenarios, is the company's forward price to earnings ratio. These move more violently than the earnings per share estimates do, and so it's more effective to hold the earnings per share constant and simulate the movement of the forward price to earnings ratio to determine where the stock price could be by the end of next year. Click the link below to watch the full video.